So good to have you join us today. Hello and welcome to the program. I'm Geun in Seoul. Coming up on today's edition of Business Daily. Korea's household debt surged in the fourth quarter as Koreans kept borrowing on the back of record low interest rates. Is the Korean economy headed for trouble in April as firms continue to struggle and the currency sees increased volatility? We'll sit down with an expert to talk about this. Our top story today, Korean household debt has broken through yet another ceiling, reaching a new record high in the fourth quarter of last year. Household debt was up 3.7% year over year, adding more than $41 billion in the October through December period. Now that brings the total outstanding balance to $1.17 trillion as of the end of last year. There was a market shift in the source of borrowing away from commercial banks to non-bank entities, like the so-called savings banks, insurance, and credit card companies. The Financial Services Commission and the Financial Supervisory Service have sent a warning message to such entities, promising to examine those companies that were behind the big lending surge. Korea's economy is showing positive signs of growth, with exports extending a turnaround after staying in negative territory for nearly 2 years. Our Ji Myung-gil has more.
Korea's exports continued their upswing in the first 20 days of February, underscoring a recovery in the country's outbound shipments. According to data released by the Korea Customs Service, exports amounted to $27.7 billion from February 1st to the 20th, up 26.2% from the same period last year. The increase was led by a 51.5% gain in exports of semiconductors, a 64.5% surge in petroleum products, and a 30.4% rise in auto exports. Korea's exports to China increased 36.7%, 34.5% to Vietnam, 31.7% to the European Union, 29.8% to Japan, and 4.7% to the US. The customs data showed imports jumped 26% to $25.5 billion over the same period. That gave Korea a trade surplus of $2.2 billion. Korea's exports had been on a downward slide for the last 2 years, but jumped by 2.5% in November from the year before, and went on to increase 6.4% in December and 11.2% in January. Ji Myung-gil, Business Daily.
Let's now take a look at how the markets fared here in Seoul today. Both major indexes gained on Tuesday, helped by increased buying by foreigners and institutions. The benchmark Kospi climbed 0.89% to end the day at 2,102.93, zipping past the 2,100 threshold for the first time in 19 months. The tech-heavy Kosdaq was also up 0.4% at 622.47. On the foreign exchange counter, the Korean won settled at 1,146.11 against the US dollar. Koreans' credit and debit card spending overseas hit a record high last year as more people opt for vacations in other countries. Data from the Bank of Korea shows that the figure stood at over $14 billion in 2016, up nearly 8% from the previous year. The amount has soared more than 65% from 2011. According to Korea Tourism Organization, the number of Koreans who took a trip overseas last year rose almost 16% from 2015 to more than 22 million. With the country's bout of bird flu now seemingly waning, consumers are finding that chicken prices are climbing at the markets. This is due to a supply disruption as a result of the massive culling of poultry. Our Eunice Kim tells us more.
Chicken and beer may be a more recent Korean food trend made famous by Hallyu, but chicken in general has been a long-time staple in the Korean diet across the social strata. And if some had kept away from poultry during the winter's bout of bird flu, they're back.
Now that the bird flu is behind us, more people are buying up chicken.
But it comes at a heftier price point that's not deterring this shopper.
It's a little bit more expensive, but when it comes to food, I tend to not look at the cost.
So how much more expensive is it? According to Korea Institute for Animal Products Quality Evaluation, wholesale chicken prices per kilogram had dipped to 888 won in December when the bird flu was on the move. But as the outbreak ebbed and demand returned, the cost shot up by nearly 150% to 2,200 won per kilogram as of last Tuesday. Demand may be back, but supply isn't keeping up. Regulators had culled more than double the amount of poultry from the 2014 outbreak, wiping out more than 33 million chicken and ducks across hundreds of farms since the first reported case in mid-November. And with the supply of chicks down following the country's worst avian influenza outbreak, large supermarkets are anticipating chicken prices to continue their upswing for the time being. Which is why major retailers like eMart and HomePlus raised the cost of their chicken products by 5 to 8% earlier this month. Chicken franchise restaurants are mulling a similar move as some project more could turn to the bird to fulfill their protein intake. The price of beef, already the more expensive choice by far, stands to edge up as authorities try to end the ongoing foot and mouth disease outbreak. Eunice Kim, Business Daily.
Just yesterday, Korea's Finance Minister Yoo Il-ho brushed off concerns about the Korean economy possibly facing an economic crisis in the coming months due to a growing number of financially weak businesses and rising currency volatility. Take a look.
There have been a series of media reports about the risks of Korea experiencing serious economic trouble this coming April. The reports cite the deadline for $400 million in debt repayment that troubled Daewoo Shipbuilding and Marine Engineering may not be able to meet. Next is the U.S. Treasury Department's foreign exchange policy report that may list not only China, but also Korea as a currency manipulator. Experts say these factors alone are big enough to strain the country's financial markets and hurt recovery. But what could make matters worse is a protracted power vacuum and the absence of a so-called economic control tower if President Park Geun-hye were to be impeached by the Constitutional Court. On this build-up of concerns, Finance Minister Yoo Il-ho on Monday looked to calm jitters, saying that there is little possibility that the Korean economy will face a major crisis on a scale similar to that of the Asian financial crisis in the late 1990s or the recession of 2008.
And to tell us more about this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. So good to see you.
Happy to be here.
So let's start with what factors might have led the media to raise such concerns about a possible April economic crisis. And of course, the first on the list would be Daewoo Shipbuilding's $383 million debt due in April. Tell us more about this.
Well, we've been hearing it for the last year or two. Daewoo has not been getting that much orders for new ships, but it continually has to pay out costs. So they've incurred a lot of debt, and their management, their ownership has basically shifted to Korea's policy banks. Korea Development Bank in particular, they are now the largest shareholder, I believe, and they have about $383 million of debt that they either have to roll over or pay out. That's coming due in April. So a lot of people are worried whether they have the cash or whether the banks will roll the debt over. But given that the major stockholder and the major debt holder is Korea Development Bank, and they raised capital last year just to try to deal with this type of a problem, and I understand that they have a fund, 380 billion won, so that's about $303 million to assist shipbuilding industry. So that's, even if they have to cover most of this debt, they do have most of the money needed to cover it.
Okay.
So if we're just looking at this in isolation, it's probably not going to be that much of a problem.
And the second factor would be the U.S. government unveiling its FX report, which could include the list of currency manipulators. And also, we can't rule out the possibilities of the U.S. Fed raising its rates again in March.
Right. Well, let's start with the FX report. The Treasury has three conditions to label a country a currency manipulator. It has to have $20 billion in a bilateral trade surplus with the United States. It has to have a current account surplus of 3% or more, and it has to intervene in the currency market, buy dollars, and pay out its own currency, and that amount has to be more than 2% of the GDP. Korea, in the last October report, satisfied 2 out of those 3 conditions, but it was a bit unusual. Okay. The current account surplus, we recorded 8%, which is very high, but that was last year in particular. We had a very slow GDP growth, but very high current account surplus because we had falling exports, but imports fell more.
Right.
We'll probably have, again, 2 out of 3 conditions in the next report. But the last condition, the intervention, nobody's realistically believes that Korea has intervened that much in the foreign exchange market. So if they stick with using the same 3 conditions, then it shouldn't be a problem. Now, what everybody's worried about is that President Trump may change the rules, but I think at least for the April report, it's a bit too late to change the rules now. So I think we'll pass the April without that much of a problem. As far as the Fed raising the interest rate, Janet Yellen has given some hints that there is a possibility that they will raise the rates in March.
Yes.
But we don't see that much of a reaction in the financial markets right now. We don't see that much capital moving out of Korea because of that. So unless something else happens in conjunction, even if the U.S. raises its rates, we don't expect the capital outflow to be too quick or too disruptive. I mean, there will be some, but it probably won't be that disruptive.
Now, coming back here in Korea, by April, the Constitutional Court will also have likely to make a final decision on the President Park Geun-hye's impeachment case. So if we do end up with a protracted leadership vacuum, then what impact do you think that might have on the Korean economy? Okay,
well, Korea has a whole bunch of bureaucrats. And nice thing about bureaucrats is that they can handle routine problems without that much of supervision. So as long as there's nothing really surprising that happens, or there's no need for emergency actions, it'll probably roll along until we do get to the next election and there's a new team in place. Now, I think what everybody is concerned about is that there's a lot of mines in the minefield right now. And Korea has made a lot of preparations. So if 1 or 2 goes off, it'll probably be okay. But if several of those goes off at once, so we do need a sort of an emergency, very unorthodox type of policies made in a hurry. This current caretaker government is not really prepared for it. So I think that's why everybody's so concerned.
Now, setting aside April crisis, some are even talking about a July economic crisis. Why so?
Okay, well, there's other, as I mentioned, there's other mines in the minefield right now. For example, there's the problem in the EU with Greece and Italy. Greece, again, is asking that it be the austerity conditions be loosened, and again, the Germans and the IMF are threatening not to give further loans. Italy's banking sector is very weak, so if there's problems there, then that might turn out to be a global problem. Then the President Trump still has not made clear what exactly his economic plans are going to be, and he's going to start sending bills to Congress. There's the new tax bill, what protectionist policies perhaps, policies on building the wall with Mexico. So we don't really know what's going to happen over there. And then there's problem that's happening with Korea's own impeachment proceedings.
Right.
What's going to happen with Samsung, and what's going to happen with restructuring the shipbuilding industry as well as the shipping industry. All those problems are mines in the minefield. So if it doesn't explode in April, then they're worried that it's going to explode over the summertime.
So whether they happen or not, I mean, can even the talk of these possibilities of possible economic crisis hurt the recovery momentum?
Well, they can obviously hurt the Korean economy, so I think it's correct to be concerned about them. But given the sort of Korean economic movement in the last, say, 20 years, we love to worry. I mean, there has been two major crises, 97 financial crisis, Asian financial crisis, and 2008 global financial crisis. But we've predicted a lot of crises that didn't take place.
Right.
What the fact that we do have so many mines in the minefield is concerned, is a worry. And if they do explode all at once, then there is a potential problem there. And that's worsened because we do have such a caretaker government that cannot take decisive actions. And if they do try to take decisive or quick actions, then there will be political opposition because, well, caretaker governments do not have strong political backing. But there's no guarantee that all of these problems will explode at once.
Right.
And if only one or two explodes, we have made contingency plans for them. So I think it's right to be concerned about them, but don't be too worried about them. And also, I think they do have to have some political contingency plans in place so that in the off chance that all these do explode at once, how we're going to have decisive economic plans that's going to be backed by all the parties of the National Assembly. That's something that I think we need to work on right now.
Now, you talked about contingency plans. So do you think then Korea is well prepared for potential trouble?
Well, I think we're well prepared if one or two of those mines that we mentioned earlier explodes.
Okay.
But score of them exploding at the same time, I'm not sure we're really prepared for it. I'm not sure if you can be prepared for everything exploding at once.
That's right.
That's why we usually like to have a strong economic team in charge of economic policy. It's not only for Korea, but for other countries as well. That's why we have those people on top. And given that the people on top are very weak right now because it's a caretaker government, we need to work out what are we going to do if, on the very offhand chance, all of these problems explode, we can get out of this quickly.
Let's hope for the time being that all of those problems don't explode at the same time. Thank you so much for coming in today.
Thank you.
And that wraps it up for today. Thanks for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, bye-bye.